So let's get started with the first one. Alright, this one asks, if you had to choose between bank stocks and REITs, which one would you invest? Okay, without a doubt, I would definitely choose bank stocks. Assuming you are investing for dividends, if you look at bank stocks itself, right, they are Maybank, Public Bank, CIMB, etc. These banks have been paying very consistent dividends. In fact, EPF's top 5 largest investments, I can just memorize it on the top of my head. They are Maybank, Public Bank, CIMB, RHB, as well as the Naga National. So 4 of EPF's top 5 holdings belong to banks. Explains a lot about their investment strategy. And I also follow part of their investment strategy. For members of the Futurists, you guys know, you can see my portfolio, you can see what I'm investing in. I do invest in quite a bit of Maybank and Public Bank stock. Yeah, if you look at Maybank itself, the history, the track record of its dividends is very consistent. In the past decade itself, it has delivered 5 to 7% dividends per year, regardless of how the broader market has performed. Even during the COVID pandemic itself, right, Maybank has managed to deliver above 5% dividends. So I think bank stocks are much more consistent compared to REITs. And if I am looking for dividends itself, for me, bank stocks are the first place to go to. So next question asks, what is one financial habit that has made you who you are today? Ooh, quite a good question. This will sound a bit cliche, okay guys, but you probably have heard it many times before. It's the habit of paying myself first. I know it's a very simple thing to say, but it's one of those habits that really sets you apart from a lot of other people. Okay, because some people, hopefully it's not most of you guys here today, right? But some people, I'm sure you guys know a few friends, they typically spend most of their salary and then don't even bother about saving. Whatever that's left, they probably would save, right? But for me, in the past few years, I started off by paying myself first. 10 to 20% of my salary, whenever I receive it, I immediately send it to somewhere that I don't see. Be it different cash apps, be it investments, be it topping up my emergency funds, right? As long as I don't see that, I make sure that this 10 to 20% gets allocated somewhere and it can generate returns. So I would say this is one of the biggest habits that has given me a lot of room to do a lot of things. Okay, so if you're one of those person that has always struggled to save, right, I think you probably might want to try by paying yourself first. Treat yourself like a TNB bill. You don't want to miss your TNB bill, right? So moving forward, just think that you earn 10% less. And that 10%, right, can be used to allocate into your emergency funds if you haven't built up enough, right? Can be used to allocate into your investments as well. Then after that, right, during the end of the month itself, if there are any leftovers, what I normally do is I have the choice to spend all of them, right? But I choose not to. Instead, I will carry forward the leftover balance and add it to next month. So let's say if I end the month like with an extra 2 to 300 ringgit, then I carry forward it to next month. Then in the next month itself, I have like 2 to 300 ringgit bonus, right? Which is what helps me save even more as well. So the strategy is pay yourself first, pay yourself last as well. So that will definitely set you on the right path towards financial freedom. And what you do with that money ultimately are then, when you start to save more, then you have a lot of different options. Okay, so we have a live question over here from Vishnu. Hi, can I ask how to buy stocks actually? Like banks. Sorry, I'm still new. Yeah, no worries about this question. It's actually a pretty good question because a lot of people here, a few of them are also quite new. Well, you can buy stocks through regulated brokers. Yeah, and these days, you don't need to register traditionally for a CDS account. Yeah, previously you had to fill in a lot of documents, then wait 1 or 2 weeks to get approved. And those brokerages, right, they charge very high fees, number one. And you have to wait. It's very slow actually. But these days, there are so many regulated brokers out there. There's Mumu, there's Weibo. Yeah, these two are very close competitors because their fees are extremely low. I'm not sponsored to say this. There's Rakuten. There's also M Plus Global. So you choose between one of these 4. If you are new, I recommend you to go between Mumu and Weibo because these are the platforms with the lowest fees right now. And you register for that platform, takes only about like a few days to get approved. Sometimes a few minutes. You submit your details And then you go to the website or the app itself, right? You'll be instantly able to buy any stocks that you want. So let's say Maybank, you just search for the ticker lah, Maybank, MAYBANK, right? If it's Apple, search for the ticker AAPL. Yeah, then you'll be able to invest it when the market opens. Okay, so that's how you actually buy stocks, including banking stocks and any other stocks as well. And these days, a lot of brokers they support international stocks as well, so you can easily have exposure to not only Malaysian stocks, but US stocks as well. Okay, so go and check these regulated brokers out. Now, let's hop on over to the next question. For firing in Malaysia, do you prefer the 4% rule, withdrawing from portfolio, or dividend income? The next question asks, how much equities allocation do you recommend in Malaysia during accumulation phase, i.e. 28 years old? Okay, so FIRE, for those of you guys who are not familiar, it stands for Financial Independence, Retire Early. It is actually a trending movement among most of the youngsters these days, because we don't want to work until we are 55 or even 60, right? We want to, as fast as possible, retire, because our thinking is ingrained to tell us that if you're working, you're not really enjoying. I have a bit of a different perspective. I believe that if you're doing what you're passionate about, if you're working on a job that you love, then you shouldn't be looking forward to retire, because it's actually helping you, because you do what you love and at the same time you can earn an income as well. But regardless, if you are into this FIRE movement thing, the 4% rule is a pretty simple rule. It states that you can withdraw 4% from your retirement portfolio every year without actually harming its returns. So let's say you got 1 million ringgit right now, okay, and that's your retirement sum, right? Every year you can withdraw about 4%. So first year, 4%, that's 40,000 ringgit. And then the next year, on top of this 40,000 ringgit, you can top up a bit more to keep up with inflation. Yeah, so that's basically what the 4% rule means. And dividend income, I suppose, is probably earning dividends from your investments and then just living off them, okay, sort of like EPF dividends itself. My answer to this is probably a mixture of both. Because if you're looking at the 4% rule, it has a few flaws. It assumes that there is no market fluctuations. You will always receive consistent payouts from whatever your investments are, okay? And it also doesn't take into account what if you have bigger expenses. If you only allocate 4% of your retirement portfolio every year and you have 1 million ringgit, you're only constricted to that 40,000 ringgit, Okay, then next year you top up 41,000, next year you top up 42,000. What happens if during one of those years you want to spend a bit more, like go to Japan trip or whatnot, right? In this case, the 4% rule kind of constricts you, which is why I do a mixture of both. I draw down a bit from my EPF, probably 1 or 2%, right, when I retire. And the remaining sum I draw down from my investment portfolio, which I am actively investing for retirement. Okay, so as we know right now, it's a bit of a sensitive issue, but EPF is no longer enough to retire, right? We have to deal with it. That's the reality of things, right? I've posted numbers online for you guys to see already, and you guys think it's quite absurd, right? Because 1 million, 1.3 million EPF just keeps increasing every year, right? And the way to deal with this is, well, we have to look at other avenues, not just EPF itself. Sure, EPF you can have a good balance if you work hard, work smart, right? Have increased contributions as well. But also on the side, you have to save. You have to save that 10 to 20%. You have to invest it into other markets, other opportunities that can generate much higher returns compared to EPF over the long run. Yeah, because research has proven there are a lot of things, articles saying that retirees run out of their retirement savings just 5 years after they've retired, right? So that's the truth, that's the reality over here. EPF is no longer enough to retire, so at the side as well, you will definitely have to invest and look for higher returns. So how much equities allocation do you recommend in Malaysia during accumulation phase, i.e. 28 years old? Okay, so this one you can use a simple rule, guys. It's the rule of 100. You take 100, you deduct it with your current age. So just nice, I'm currently 28, right? That's 72. Meaning, 72% of your portfolio right now, retirement portfolio, including EPF should be inside as well. That should be invested in risky assets. So risky assets, i.e. growth stocks, i.e. aggressive unit trusts, Bitcoin, gold, a mixture of these, right? To ensure that you have a good growth rate based on your current age. And it makes a lot of sense. Let's say you are 55 or even 60 right now. So 100 minus 60, you're only supposed to be like 40% invested in risky assets, right? Because when you retire, you need your money sooner. You don't want the market to fluctuate, to crash, affect your retirement savings, right? But if you have the time, like 20 to 30 years away from retirement, you're still young, like currently 28 years old, you should be about 70 to 80% invested in risky assets. And when you start to factor in your EPF inside, right, when you do a pie chart, right, most of us start very conservative one. Probably if you go and do a pie chart tonight, right, you will see your portfolio about 70 to 80% in EPF. That is a signal for you to start dollar cost averaging into more aggressive assets, because EPF is your safe buffer here. Okay, so use the rule of 100. It's a very good rule to figure out how much you need to be investing in risky assets. And next is regarding equities, right? Like stocks. What is the comfortable percentage? Well, it entirely depends on you. Our members know, they see my portfolio every month. I'm about 40 to 45% invested into a mix of US equities, Malaysian bank stocks, and Malaysian tech stocks. So you can come up with a figure that you're comfortable with, as long as you get involved with these risky assets as soon as possible to increase your returns for retirement. The next one, I have a quick question by Jonathan. Says, thoughts on cash trust products. So cash trust, the returns look very promising, right? When you look at these quote-unquote investments, actually they're not supposed to be classified as investments. They're supposed to be classified as assets that you pass down to your family members or perhaps your kids when you're no longer here. That is what a cash trust is supposed to do. But these days, it's getting more and more treated like an investment, for those of you guys who don't know. So you approach the cash trust company, you fork out a ginormous sum. Their minimum deposit, I think for some is like 30,000 to 50,000 ringgit. And then they will give you a brochure telling you the returns. And it looks very good to be true, too good to be true in fact. The returns that they give you, some 8 to 10%, sometimes even double digits, right? But you're required to lock up your funds. If you withdraw early, they will give you a penalty. Sometimes they'll penalty like 30 to 40% of your capital. So this one, I try not to get involved with them. Because why? I've been approached by an agent before. If there's any cash trust agent here, I'm sorry if I offend you today, okay? I've tried to ask the agent, where is my money going to when I'm investing in this cash trust? Because that's part of doing your own research, right? You got to understand, where is this 8, 10, or even like 12% returns coming from? How do you guys generate such a healthy return without even, forfeiting your capital or whatsoever? And then the agent doesn't want to tell me. They say, we can't tell you this. What we can tell you is, here is the trust. Here is how much returns you'll generate. If you're interested, deposit with us. So that to me is a red flag, and that's why I don't want to invest in cash trust. If you can, and if you want to get involved with cash trust, try and ask the agent, how are they generating such a healthy return, right? In fact, any products that you guys are investing today, if it's through an agent or whatnot, and they try and tell you that, okay, it's a very healthy return or whatsoever, they give you a very good figure, a very good breakdown, just ask them where is it coming from? How is the return being generated? Are you investing in stocks? Are you investing in US ETFs or whatnot? Then that should give you a better idea of whether you want to get involved with it or not. Okay? Okay, so this one's from you guys, from the public. Asks, why not use KDI Save as your savings app? Gives 4% though. Then the next one asks, how are you dealing with the SST increase? Everything will increase, right? So 2 questions. I will answer the first one, and I will bring up this picture which I promised to talk about. So my job at the future is to do work like this for you guys, is to compile all of the cash apps, most of the cash apps at least, that are available in the market right now into one giant list so that you can refer. Now, it is nothing wrong for you to go and use a cash app with higher returns. But understand this, it is not the habit that will give you financial freedom. Yeah, I think some people will say, wow, then you post this for what? Right? Well, we post this because we want you to know which cash apps give you the higher return. But this, yield hunting, specifically like moving your entire savings from one cash app to another cash app just for an extra 0.1 to 0.2% profit, this yield hunting thing, this is not the habit that will give you financial freedom. Because if you think about it, logically, a 0.1% to 0.2% difference on your capital of 10,000 ringgit, it only translates to an extra 10 to 20 ringgit of profit every year. So that is not what will give you a comfortable retirement. It is the act of saving, intentionally saving during the start of the month, 10 to 20% of your pay, right? And then paying yourself last, using that leftover money, top up your emergency funds, make sure you're covered by insurance, and then start to invest in the markets as soon as possible. This habit is much more important compared to, oh, this cash app is giving 4% right now. My cash app is giving 3.8%. I better move all my savings there. Right? That is not the habit that will give you financial freedom. Okay, but if you're doing this and if you have the time, it feels good, sure. It's more like a feel-good thing. Okay, I do it sometimes whenever there's like a cash app that gives promo. Okay, they give like 4.5 or even 5%, right? Sometimes I'll be tempted to move because when the difference is big, when it's like a 1 to 2% difference, then the profit adds up. But if it's like a 0.1 to 0.2% difference, in my opinion, it's better not to bother. Okay, it's better to focus on the fundamental habits, the one that will ultimately give you financial freedom. Okay, so hopefully that gives you a good explanation of why I'm not yet trying to move towards KDI Save, although a lot of people have been asking me to, but I may look into it in the near future. Okay, so next question. Let me just bring up the question just now. Okay, so next question asks, how are you dealing with the SST increase? Everything will increase, right? Yeah, so SST increase, guys. This one is inevitable. We have to deal with it. Fortunately, recently the government announced that they will be exempting SST on apples as well as oranges, right? So that's a bit of good news for Malaysians. But unfortunately, a lot of the things that they tabled in the Gazette itself, it will go through. So be prepared for it. And to say that everything will increase in price is a bit of a broad statement. I wouldn't say that. I would say notable services as well as notable items, those will go up in price. So take note, Japanese restaurants as well as a few other restaurants, they are most likely to revamp their menu and obviously increase price. Because if you look at the specifics of the SST itself, it will affect the service side, particularly for commercial rentals. Okay, so those shop lots in the malls, as well as those shop lots in Sri Petaling or whatsoever, right? I live in KL, by the way. They will most likely be affected. Their service tax will be increased from, I think, 6% to 8%. Okay, so the landlord will absorb the cost and they will definitely pass it down to the shop lot owner, in this case the restaurant. And because restaurants already operate on thin margins, they will pass this cost to consumer. And restaurants, they won't only get hit with this service tax and they'll be hit with the tax on food as well. Because remember, salmon, avocado, blueberries, strawberries, yogurt, just to name a few. The full list is in our bio, you guys can have a look at it. It's in our profile. So these few items will be hit with the SST, not to mention a lot of other premium fish as well as truffle, right? So if you look at Japanese restaurants, they serve a lot of what? They serve a variety of seafood, including squid, scallops, salmon, the most famous one, tuna, raw tuna, right? Your sashimi, all these are going to be hit by SST on July the 1st. So we are going to expect, I am confidently going to expect that restaurants, particularly Japanese restaurants, will be heavily hit by the SST, and they will be forced to absorb some of the costs. The remaining costs, they will pass it down to consumers. So you probably will not see a sudden spike in prices. You probably won't see like 10 to 20% spike, yeah, because that will make them run out of business. But you'll probably see like a 2 to 3% increase. Then over the next coming months, and including next year as well, right, you will see that increase probably another time. Okay, because the new SST is very broad. Now, how am I dealing with the increase? I have 3 methods. The first method is substitution. So rather than buying those stuff that are affected by the SST, i.e. imported fruits like blueberries, strawberries, I will consume less of them and swap them with local stuff, like local fruits. Apples and oranges, fortunately not taxed. Local fruits such as bananas, chikus, papayas, right? And so substitution is one. The next method is stocking up. So we know that SST will be implemented on 1st of July, but there's a compliance period for companies until end of the year. Okay, so I'm using this period to stock up on food that have a longer shelf life. So if you know salmon is getting hit, I recently just contacted my local fish seller on WhatsApp or something like that. I just bought one whole salmon and store it in my fridge. Okay, I haven't done that before, but that's the first time I'm doing it. So stock up, but don't go too extreme lah. Okay, don't go like doomsday prep or anything. Just if you can and you have the cash buffer to do so, you might want to start stocking up, right? Because preserved meats, right, like those hams, those beef balls or whatsoever, yeah, those will be hit by SST on the 1st of July as well. So it's a very broad increase. The final method is preparing a buffer. Okay, so I'm not so sure exactly how much prices will go up during the second half of the year, but I'm pretty sure that prices will go up. So to be safe, for the next half of the year, I just top up my grocery budget by 5 to 10%, just to be safe, just to have a healthy buffer and not get suddenly caught off guard by all of these price increases, right? So these 3 methods, I just repeat myself again: substitute to cheaper alternatives or local produced stuffs, particularly fruits. Next, stock up those frozen items or perhaps those things that have a longer shelf life. Yeah, but don't go over the board. Okay, only do it if you have extra cash. Third is prepare a buffer. Okay, don't get caught off guard by price hikes. Reduce your spending in other areas. Allocate it to necessities such as your groceries. All right, so hopefully it will give you a good idea on how to deal with the upcoming SST increase. Okay, next question asks, gold and Bitcoin all-time high right now. Is it still a good time to buy or not? And another question asks, any investment for intro? Okay, gold and Bitcoin. This one, okay, I can tell you why it's at all-time high right now. Number one, because there's a lot of uncertainties, right? If you look at around the world right now, geopolitical tensions has never been this high before. Okay, it's crazy high in our era, so to say. Okay, there's this war with between Ukraine and Russia, right? And then more recently in the Middle East, although it has said to have been resolved already, but it is still ongoing, right? And next, central banks around the world, they are reducing interest rates, right? They are starting to cut interest rates, and they have already cut interest rates actually. And when you cut interest rates, you're actually making more money flow into the economy. Okay, it's also one of the reasons why stock markets are going up. In fact, if you look at the US stock market recently, it has hit another all-time high, right? And more scarce assets such as gold and Bitcoin, yeah, they continue to shoot up. The third reason of gold going up, shooting up this year, is because central banks are buying. If you call up a chart, you go to Google and you search gold holdings by China, by France, by Russia, by India, right? search these 4 countries, they have all been aggressively accumulating gold, especially China, in the past 1 or 2 years. Okay? So one of the largest reasons of gold reaching all-time highs, in fact this year just took off, right, is really central banks heavily accumulating. Okay? And another one is people are losing trust in the government, right? If you look at how the US is playing with the world right now, the tariff thing, and then after that, it interjects itself between the war of Iran and Israel, right? If you look at how messy the administration is, people are starting to lose confidence in the dollar, right? And when people lose confidence in the dollar, where else can they go for safe havens? Number 1 is gold. Number 2, the second best alternative is Bitcoin. So that's why you really see just these 2 assets just take off. Do I believe that their upward trajectory will continue? Yes, I think so. Probably there will be a retracement. There will be some sell pressure because the uptrend has been just so aggressive recently. But long-term wise, if you think about it logically, do you trust the US government in like managing their policies, or do you trust in the US dollar? If your answer is no, then you're pretty much in the same boat as a lot of people right now. Yeah, that is why they are buying assets that cannot be easily inflated, cannot be easily replicated, cannot be controlled by any centralized authority. That is gold and Bitcoin. So still a good time to buy. Now my take is that it is always a good time to buy if you don't have any allocation right now. Let's say for me, I'm a beginner, I'm 0% in Bitcoin, 0% in gold, right? And then I listen to podcasts, I read a few books, and I'm interested to invest in this asset. And then I put a target for myself. Okay, I probably want 10% in gold, 10% in Bitcoin, right? That makes up 20% of my portfolio. Right now I have 0%. So no matter what the current price is, I should enter a bit, regardless. Okay, so that's what I would do. If I'm underexposed right now, I'll probably just allocate a bit, and then just dollar cost average as the months pass. Just don't look at the price, just dollar cost average, and have a more simple approach. Okay, and when it goes overweight within my portfolio, let's say if I'm currently at 10%, my goal is to maintain it at 10%, right? Then Bitcoin rallies, 2x, say rallies like from 100,000 suddenly into $200,000. Then my exposure from 10% becomes 20%, right? So I just rebalance it back down to 10% so that I don't take too much risk, and at the same time remain to whatever figure that I'm comfortable with. Okay? So if you are confused about how to allocate your stocks, your gold, your Bitcoin, whatsoever, fix a specific percentage for each of these assets and then try to stick with them. And if you are currently at 0%, that means you're underexposed. That is a signal for you, no matter what the current price is, to allocate a bit, see where the market goes moving forward. Okay, which would I prefer? Gold and Bitcoin? I actually have both. So both of them, gold is about 5% of my portfolio. Bitcoin is about 10 to 12%. So I slightly prefer Bitcoin a bit more because the growth of Bitcoin is a bit more attractive. Okay, so that's my answer to that. Any investment for intro? Well, I've talked a lot about it just now. There's gold, there's Bitcoin, there's US stocks, there's Malaysian bank stocks as well, right? So these are the few investments that you can try if you're a new investor. So Q&A session, there's one asking, I'm a newbie in investment. I have about 5K of savings. How do I grow my savings? So let's rewind back time. Let's assume that I'm at your current stage. I already saved up my 5K. What would I do with it? Okay. Number one, I will make sure that I will settle my emergency funds first. So big question for you is, do you already have 6 months of your income stored somewhere liquid? If you don't have, then better work on that first. Then after emergency funds, are you covered by any insurance? Do you at least have a medical insurance or not? Because right now, medical costs are sky high. You don't want to be admitted to a hospital and cannot claim for your insurance. So those are the few things that I will settle first. Then number 3, I will start looking into the assets that I talked about just now. Gold's pretty interesting. Bitcoin is also quite interesting, right? US stocks, you cannot avoid them. Even though you lose trust in the US government, right? US companies are still here. Today, what app am I using to do this live session with you guys? It's Instagram. Instagram is owned by which company? It's Meta, right? And Meta is one of the top 10 largest companies in the world right now. Meta also owns what? Meta also owns WhatsApp. Meta also owns Facebook, right? So as much as possible, you want to get involved with these growth companies, right? Because everybody in the world, almost everybody in the world is using them, right? Which makes a lot of sense to at least get involved in a bit of US stocks. And if you think about it, NVIDIA are computer chips. Apple, today I'm using iPhone to stream with you guys, right? So it makes a lot of sense to at least have a bit of exposure in US equities. So Chester asks, how much is too much to pay for medical insurance? Great question, Rita. This is a fantastic question. And I also recently posted about it. You can, after this session, you can click on our profile. And I actually, there is a recent post saying medical cards that cost between 50 to 150 ringgit. So that is the benchmark that you can look at. Okay, because on average right now, Calteam, there's Generali, there is FWD, there's Etika, right? These four medical card providers, you don't go through any agents one, so you save a bit of money from there, right? These four providers, they charge between 50 to 150 ringgit for a 28-year-old male. I'm taking myself as a reference. So if you're at this generation, you are 20 to 30 to 35, I think a good benchmark would be 150 to 200 ringgit. You don't want to be paying more than that. If you are paying more than that, you have to check your coverage, whether it's at least like a 1 million ringgit coverage, or what sort of other benefits does it bring. Are you also investing in a plan with investment or not, i.e. investment linked plan? That may be one of the reasons why you are paying more as well, right? And for those people who are involved with investment linked plans, go and double check with your agent. Specifically, what is the product within the ILP itself? How is that product generating returns, right? Because very often, investment linked plans, they don't keep up with inflation, right? They generate 2 to 3% returns every year, which honestly, you might as well just use that extra money and invest yourself, right? And my advisor, who is Han Liu, he's the founder of Ringgit Plus and also Halogen Capital, he said this before, something clicked on my head, it says, you buy insurance for protection, not for investment. You don't use a refrigerator to cool down your house, okay? If you have the knowledge when it comes to investing already, and you know how much risk you're supposed to take based on the rule of 100, yada yada, you listen to many people talking about US stocks or gold or Bitcoin whatsoever, you are confident that you can generate returns already, then it's sort of like a bit shooting yourself in the foot if you are going to investment linked plans and you are well aware that those investment linked plans don't keep up with inflation, right? If it were me, I would just use the extra money. And if you try to say that this is for my retirement, just top up with the EPF, because EPF gives you tax reliefs, right? I think 3,000 to 4,000 ringgit for voluntary contributions every year. Okay, so check. Yeah, the benchmark is 150 to 200 ringgit. You can take a look at the post in our profile. You have a better idea on what sort of products they are. Okay, so that one is not sponsored. Yeah. Any suggestion which US stock to invest at this moment for mid-term range? Now, suggesting stocks is a very risky thing to do in a live session, right? Because when I say something, right, and I say that, oh, this stock will take off or whatsoever, what if it goes down and then I'll get into trouble because I said this, and then people lost their life savings, right? My approach when it comes to investing in the US market is I don't stock pick. I don't specifically invest in Apple, Microsoft, NVIDIA, or any of these companies. In fact, I invest in all of them. I invest in an index that tracks all of these companies. And that's called the S&P 500 index. So you can take out your laptop right now, go and do a Google search, S&P 500 index. That is the index that tracks the performance of the 500 best performing US companies. And my thinking is this: why have one US company working for you when you can have 100 or even 500 of the best US companies working to generate your returns? And next one is, if you pick this particular stock today, say, okay, like Apple. I don't want to scare you guys, okay? But I'm just going to use Apple, okay? How sure are you that Apple will continue to be the giant company it is today in the next 20 to 30 years? Are you sure that there won't be another, like previously Nokia? In 2000s, right? Everybody thought Nokia at the time was the Apple. Everybody thought Nokia couldn't be replaced. Then Apple came in, and Nokia, if you invested in Nokia, then you wouldn't have gone anywhere, like you would have lost a lot of money, right? What's to say there is another very undervalued Apple somewhere down there right now that can take over this trillion-dollar company? It sounds impossible, huh? But remember back in the year 2000, something like that, right? You tell anybody that Nokia is going down, right? Nobody will believe you. They will think you are just crazy, right? But these days, I learned that anything is possible, which is why I choose the more long-term option. I know that the US market will still be here in the next 50 years. It probably won't disappear overnight, okay? And I know that right now, the entire world is relying on US companies, right? The top 10 largest companies in the world, 9 of them belong to the US, right? Apple, Microsoft, Nvidia, Netflix, Amazon, there's Tesla as well, I think somewhere there, right? So all of these companies, the world uses, and I invest in an index that tracks all of them. Okay, so the index, the ticker for it is either the QQQ, the VTI, VOO, these few. These are the few ETFs, exchange traded funds, that track the US market index. So you can invest in them just like how you invest in a regular stock. You can go to your broker. As long as your broker supports US stocks, they will most likely support US ETFs as well. You search for these tickers and you can just invest in them like a regular stock. If you are our learner member and above, right, you can actually get to see my portfolio, what I'm investing in. I update it once a month. I give all my members like a PDF breakdown of what I'm currently investing in. Why did I choose to invest in this? So on and so forth. So yeah, you guys can click into the link in my bio and figure out how to join. Okay. So next one says by Rosen, says, okay, in Bursa not possible. Highest you can get from S&P is also averaged at 12 and 10%, subtracting inflation. Yeah, that's correct. So if you want to target a 15% return for the Bursa market or any market in general, this is a very high return and it's very difficult to achieve. Okay, I know Bitcoin has managed to achieve this because it's still a very new asset, and the world is starting to look into it. But you also have to acknowledge that in some years, Bitcoin goes through a bear market. Everybody has seemed to forget that in 2021, 2022, Bitcoin fell by 70 to 80%. And at that point of time, it dropped all the way from 69,000 down to $15,000. Right? And when it's at $15,000, you have that hindsight, right? It's very easy to say buy now. But when you've seen this asset drop from like 69K to 15K, the sentiment at that time is very different. Okay? So if there's an asset out there that tells you that, oh, you can generate 15% returns per year, no risk, don't worry, it is very likely a scam. In fact, probably 100% a scam. Okay, so if it says that it can generate 15%, but there is a lot of volatility, yeah, something like Bitcoin, like it goes down 20 to 30% when markets are bad, goes up 40 to 50% when markets are good, right? Then you must understand the risk as well. And when it comes to Bursa itself, it is possible, but the risk is very high. Okay, and to generate it 15% every year consistently, that is very difficult. Okay, because in some years the market will decline as well. So you have to acknowledge that. And that is also the same risk when you're investing in US stocks as well as US ETFs. If you call up a chart of the S&P 500 index, the growth is like that over long term, but short term wise, it actually goes up and down. Man. In some cases, it drops by 20 to 30%. Okay, so that's what I'm talking about. When you want to generate higher returns, sure, you also have to acknowledge there is a great risk for drawdowns in your portfolio, which is why if you have a long time horizon, then you take more risk. If you have a short time horizon, let's say you want to go to Japan next year, it doesn't make sense for you to throw all of your Japan funds into Bitcoin or into the US market, because probably next year US enter into a recession. What happens? Then you will lose 20 to 30% of your Japan savings, right? So longer time horizon, take more risk. Shorter time horizon, take less risk. What are your thoughts on fixed deposits with high interest but long maturity tenor, i.e. MBSB, Bank Islam 4%? What scenarios, in your opinion, are ideal for using it, i.e. emergency funds? Now, fixed deposits are not a good place for emergency funds. Why? Because emergency funds, you are supposed to access it anytime. It's supposed to be liquid. And it is supposed to have low to no market risk. Now, fixed deposit, sure, it is liquid. You can withdraw it anytime, right? But you forfeit the interest earned. In this case, there is already the market risk there, right? So I wouldn't store my emergency funds in fixed deposit. I would store them in cash apps. There are many cash apps these days that can give close to 4%. In fact, there's KDI Save right now, already giving 4%. They pay you out, I think it's like every week or perhaps every day, right? The people in the chat can correct me if I'm wrong now, okay, if you're using KDI Save. Then there's also Versa Cash. There's also Rise. There's also like Mumu Cash Plus. There are so many products out there these days that can help you generate very good returns, like 3 to 4%, some even going as high as 5%, with low to no market risk. Okay, so that is where I will prioritize storing my emergency funds in. In fact, there's another one that I didn't mention, right? There's ASB, ASM. Right, if you're Bhumiputra, the quota per person is 300,000 ringgit. Okay, automatically, if I'm a Bhumiputra, I would use ASB as one of the top avenues to store my emergency funds, because it's flexible. You can withdraw online 2,000 ringgit per month maximum. But if you go to an ASMB branch, a counter, you can withdraw your entire account immediately. You get the funds back, right? So it gives you it beats inflation, number one. Right? It generates 4 to 6% return per year. It also gives you the liquidity. You can access your funds anytime. And then there is low to no market risk. When you withdraw out, you don't lose all of your interest earned, right? Because ASB, they calculate your dividends every month. Or when you talk about cash apps, they calculate your earnings perhaps every day, right? So the only scenario where I would use fixed deposits is when I don't want to be tempted to spend the money. If you use cash apps, if you use ASB, ASM, for those people who are not really disciplined, right, they will be tempted to take their money out because it's flexible. You can withdraw it anytime. And let's say if you want to save towards a trip next year, in the next 12 months, you already have the funds already. You just want to put it somewhere that you don't want to see, right? Then fixed deposits could be a good option, okay? And in this case, MBSB, Bank Islam, they're giving 4%, right? It's actually quite a good return, okay? And that is the perhaps the only scenario which I would consider FDs. One asks, tariff pause drama coming. Yeah, so for those of you guys who don't know, Donald Trump in April shocked the world by implementing sweeping tariffs on almost all the nations around the globe, right? And that shocked the markets, shocked the global markets, including the US market. But more recently, because of his 90-day pause, markets have went back up again. In fact, today, last week itself, the US market has hit an all-time high. Okay, which talks a lot about the sentiment or the reaction regarding Trump's tariffs. So people are right now fearing that after the 90-day pause, which is somewhere in July, I think it's like 6th or perhaps 9 July, is when the 90-day tariff pause ends. People are afraid that this will translate into a lot of volatility. And I think it probably will, okay, because I also have a photo to show you guys. So this one says, Trump says he could shorten or extend tariff pause. That's the first article. Next one says, Trump trade deadlines in July not critical, says the White House. The third one by CNBC says, Trump shrugs off July tariff deadline. We can do whatever we want. And the last one says, Trump says willing to extend trade talks deadline, but says that won't be necessary. Now from these 4 headlines, I really don't know what to tell you guys. I think this Trump guy is just a very funny guy. He's so messed up. Yeah, he doesn't even know what he's talking about, and the markets don't even know what's going to happen. Okay, and probably what you're seeing, the reaction in the market right now, recently it has touched a new all-time high, right? US market. It's because they believe Trump will just delay and will just implement another pause. Even though he said to the public that, oh, we can do whatever we want or stuff like that, right? But the reality is, he can't, right? He can't really do whatever he wants, right? Because if he tried to do whatever he wants, he wouldn't have implemented the 90-day pause, right? So I think there is drama incoming, but markets so far, they have downplayed this. They think that Donald Trump is a joke. They decided not to listen to whatever Trump is trying to say, and it's just rallying up right now. Okay, but be prepared. Be prepared for some volatility during the tariff pause itself, yeah, particularly in July, early July. So next one asks, are investment options in Luno or Versa compliant with SC or BNM regulations? Yes. So just a fun fact to note, all of the products that we talk about in our page, they are regulated by the Securities Commission. They are also acknowledged by Bank Negara Malaysia. If it's not regulated by Securities Commission, it is acknowledged by Bank Negara Malaysia. Okay, so when we talk about, let's say Versa, let's say all of the cash apps, right, and all of the digital banks, right, yeah, they are protected by PIDM, one, a few of them, or two, they are regulated by the Securities Commission. So Luno, Versa, yeah, they are regulated by the authorities. Can try Touch and Go Plus, using it since Pioneer, 3.45% interest daily masuk. Yeah. So if you're using the Touch and Go app, right, it doesn't make sense for you not to use the Go Plus feature, because everybody is paying using the e-wallet anyway. You might as well just use the Go Plus feature, because that is one way for Touch and Go, this greedy monopolistic company that doesn't improve their toll system, right? This is one way for you to take money from them, right? And right now the deposit limit is like, they level it up to 20,000 ringgit already. If you max it out, which I don't recommend, okay, I don't recommend storing too much money in a particular cash app, because I will explain about the risk later. But if you do max it out, and if you like have put 20,000 ringgit inside there, you will earn 1 ringgit and 90 cents every day. So it's like enough to cover your toll already, okay, if your toll is this cheap every day. So go and use Touch and Go Plus, guys. It's really one way to go and take money from this company, okay? And okay, here's the risk okay? The risk is it's not covered by PIDM. It's the same risk as Versa. Like when you use Versa, you use those cash apps, Versa Cash, Versa Cash I, right? The one that gives you 3.5 to 3.9% returns, right? They are the same category to Touch and Go Plus. Except that Touch and Go, they give you the flexibility to withdraw anytime, and they pay you out every day. So if you look at the most recent post in our profile, I've been using it since 2022, 2021. The interest that I've earned from there is amazing. It's over 500 ringgit right now. So yeah, if you're already using the Touch and Go e-wallet app, might as well just sign up for the Go Plus feature. It only takes about 5 minutes and you get approved already. And it's an easy way to earn some profit from this particular company. So next one, so Trout will also be hit. Yes, the SST. I'm assuming you were talking about SST. Yeah, all of the Trouts, they will be hit by SST. Salmon, almost all types of tunas, yellowfin, bluefin. I think there's one big hit tuna or something like that I saw in the SST document. All of them will be hit coming 1st July. There's also scallops, Oysters, they are previously taxed, they'll be maintained at this 5% tax. There's octopus, I think octopus will be taxed as well. Which is why I said just now, right? Japanese restaurants, they'll be hit the most by this SST increase. So be prepared for price hikes. Okay. If your company is already providing you with an insurance, would you still recommend people to have their own personal one? This one is asked by Jelly Melim. Yeah, always. I'm not an insurance agent and I don't have any products to sell to you guys, but insurance is not a scam. Go and get it, at least a medical. Okay, because these days, getting admitted to a hospital itself, the costs are absurd. Touch wood, if somebody gets dengue, right now I think it's like 8 to 10,000 ringgit already. If anybody who is in the medical industry, can you comment on what is the cost right now being admitted into a hospital if they get dengue, right? I think it's easily 8 to 10,000 ringgit. The cost is absurd. And if you don't at least have a medical card, you would have to be financially prepared for all of these shocks. Okay, so as much as possible, try to at least get a medical card. It doesn't have to be linked with any investment plan or whatsoever, because you already have the knowledge on how to invest, right? So go and invest yourself, but at the same time, have a medical card in case there are any emergencies, because at the end of the day, a company's insurance, I think somebody also mentioned here, a company's insurance, their coverage is like only a few limited things only, right? They don't actually cover a lot of other things that medical insurance can provide for you. So somebody said, I got admitted recently for 6 days and it was almost 10K in my bills. Yeah, it's absurd. The medical cost right now is crazy. Okay, so, but here's the kicker, right? Medical insurance, the medical cards, they are still very affordable. You take a look at our bio, okay? The 4 companies, they are offering medical plans. 2 of them have above 1 million ringgit coverage, and you can get them for 50 to 150 ringgit a month. Okay, but you don't go through an agent. You have to claim yourself. You have to write the recommendation letter whenever you want to make a claim. But that's one, at the end of the day, you can ask ChatGPT, right? Because these days, the AI can pretty much help you solve quite a few of your problems, right? In fact, I compiled a list of medical insurances. What are the criteria? Like when should people opt for medical cards, life insurance, critical illnesses or whatnot. That list was actually compiled by ChatGPT. Last question, okay? I'll just take one last question from you guys before I leave. Really, thank you guys so much for joining today, by the way. I was wondering if it's still a good time to buy property for investment. Okay, if you follow a few people, right? There's Mr. Money TV, there is iHeng, there are quite a few people talking about property as well. And I think they are way more experienced than me. They also have way more capital because they are at the stage where they have earned a lot of wealth already. So you can probably look towards them and take their opinions with a grain of salt, because at the end of the day, the decision falls on you. My perspective is this: I won't rush into buying property right now. Why? Because if you look at condos, the development is popping up left, right, and center. Right? I'm living in a condo currently. I'm renting. I'm paying about 1,500 ringgit for my rent every month. And right now, near my area, there's easily 3 to 4 other developments popping up already. Okay? And when you have a lot of new condos popping up, logically, plus Malaysia's declining birth rate, you will have more supply, and this supply will likely outstrip demand. So where will the price trajectory go in the near future, right? Because if you look at a lot of condos right now, especially old condos, they don't really retain their value very well. A lot of people have fallen into the trap of investing in a condo earlier. They bought it for like 5, 6, 700,000, and then right now that condo is lelong for like 300,000 ringgit only. It's very sad. And one of the big reasons for this is because there is a lot of other newer condos popping up elsewhere, and we are also quite poor. Right? That's the reality, right? The current generation, if you ask anybody in the millennial generation as well as the younger generation, right, around younger than I think Gen Zs as well, right? If you ask anybody on the street today, how many properties do you want to own? Okay, you can answer the question right now. How many properties do you guys want to own if you're a Gen Z or a millennial? I can tell you my answer is only one. I only want to buy one property, that's it. I only want to own one property. I don't want to own like 5 or 6 and then, you know, have the hassle of like renting it out, then worry about market drops, right? I would rather use that additional capital I have to invest in assets that are easier to invest, right? Such as Bitcoin, which doesn't require a lot of capital, such as gold, such as US stocks, such as bank stocks, right? Those assets can generate much better returns, and they have generated significantly better returns compared to the property sector. So property sector, the average return in like past decade is like 6 to 7%, if I'm not mistaken, average lah. Okay, US market is like 10 to 12%. Banking stocks, Malaysia banks, if you consistently dollar cost average, is about 6 to 9%, including dividends, right? And the risk is much more, is different, not to say lesser, but it's completely different compared to investing in a property, right? So I wouldn't rush into buying a property, but I would look into buying a landed property in the future when I want to have a family, settle down, have kids, at least leave something for them in the future. So that's my general take in this. You look at our wages, the median salary is 2.6k. How on earth are you going to afford a 1 million ringgit landed property? And if you look at this trajectory, where is the demand going to come from? Who is going to buy all of these remaining properties, right? So that is something that you probably can think about. All right. Hopefully it's a great session. Thank you guys so much for joining. Hopefully I addressed most of your questions. If I skipped any of the questions, apologies. You can always direct message me. Yeah. I look at all your messages, guys. I have a team that is managing the messages, but I always look at all your messages, whether it's whatever comment or whatsoever. Don't hesitate to send them to me, right? And if I have the time, I will try to respond to them one by one. Okay, so if you have anything to ask after tonight's session, right, don't worry, you can always DM me. If you're a member as well, right, you have my WhatsApp number. Okay, you're in the WhatsApp group. If for those of you not in the WhatsApp group, click on the link in our bio. You can join our WhatsApp group, right? If you're already in the WhatsApp group, you have my phone number. Just drop me a WhatsApp message. I will try to reply you to the best of my capabilities. Have a great night, everyone. Bye. Stay safe.